Ever wondered how safe your money is in a bank? It's a question that has crossed our minds at one point or another. Well, let's delve into the traditional banking system and shed some light on its safety measures. Most bank deposits, believe it or not, are insured. Yes, you heard that right. In Canada, for instance, we have the Canada Deposit Insurance Corporation, or CDIC for short. This organization protects up to $100,000 of eligible deposits at member banks. This means if something were to happen to your bank, your money up to that amount would be safe and sound. Now you might be wondering, what constitutes these eligible deposits? Well, these include your everyday bank accounts, guaranteed investment certificates, also known as GICs, and term deposits. So, if you have any of these, you can breathe a sigh of relief. But wait, there's more. Some banks have CDIC coverage for multiple issuers. This means they offer an even greater coverage than the standard $100,000. So if you're with one of these banks, you've got an extra layer of protection. However, it's important to note that not all types of investments are covered by CDIC. Mutual funds, stocks, bonds, ETFs, or cryptocurrencies, for instance, fall outside of their protection. So if you're heavily invested in these areas, it's something to keep in mind. In the unlikely event that a major bank were to fail, it would indeed have significant implications. But rest assured, several mechanisms are in place to ensure the safety and security of your deposits. So, your money is pretty safe in a traditional bank, but what about digital banks? Let's dive in, but first do me a favor and smash that like button if you're enjoying these videos. Now, on to the digital banks, the future of banking. Are they as safe as traditional banks? Enter the age of digital banking, a revolution that's changing the way we manage our finances. With the advent of fintech startups, we're seeing a shift from brick-and-mortar establishments to banking right at our fingertips. But how does safety measure up in this new landscape? Just like traditional banks, digital banks are also regulated and adhere to the same standards of security, but they're pushing the envelope even further. Take Wealthsimple, a Canadian fintech startup, for example. They're offering their users 3 times the deposit insurance coverage provided by the Canada Deposit Insurance Corporation, or CDIC. This means that clients with cash accounts can now receive up to $300,000 in CDIC coverage compared to the standard $100,000. Why is this significant? Well, it's all about confidence. The more coverage you have, the more secure you feel about where you're holding your savings. This move by Wealthsimple is a response to the growing need for better depositor protection in the face of global bank failures. It's an innovation that aims to give clients more confidence in digital banking. But it's not just about safety, it's also about convenience. With digital banks, you have 24/7 access to your accounts, real-time tracking of your spending, and instant transfers. Plus, they're often more cost-effective with lower fees and higher interest rates on savings. So, are digital banks as safe as traditional banks? The answer seems to be a resounding yes. In fact, they're not only matching the safety standards of traditional banks, but also raising the bar. So it seems, digital banks are not only matching the safety of traditional banks, but also raising the bar. What have we learned today about the safety of your money in banks? Well, there are a few key points to remember when it comes to safeguarding your hard-earned cash. Traditional banking institutions have set safeguards in place, such as the Canada Deposit Insurance Corporation, or CDIC. This protects up to $100,000 of eligible deposits. These include your bank accounts, guaranteed investment certificates, and term deposits. It's like a safety net, ensuring that your money is secure, even in the unlikely event of a bank failure. However, it's important to remember that not all financial instruments are covered. Mutual funds, stocks, bonds, exchange-traded funds, and cryptocurrencies fall outside of the CDIC's protection. So, when you're making decisions about where to park your money, it's crucial to consider these factors. But what about digital banks? Are they as secure as traditional banks? The answer is a resounding yes. In fact, they're stepping up their game. Take Wealthsimple as an example. This Canadian fintech startup is now offering its users 3 times the deposit insurance coverage provided by the CDIC. That's up to $300,000 in CDIC coverage. It's a move designed to instill confidence and offer greater security for their clients' savings. So whether you're leaning towards a traditional banking institution or considering the digital banking route, remember this: your money is protected. These safeguards are in place to ensure that your money is safe, no matter where you choose to deposit it. Whether you choose a traditional bank or a digital bank, rest assured your money is in safe hands. Thanks for watching, and until next time, stay smart about your money.